Hello, hello, hello. What's going on, everybody? Welcome now, Stock Trades. How's everybody doing today? Let me go ahead and adjust this mic, actually. It's a little too low. Let's adjust this mic here, right? All right, there it is. Yeah. All right. Okay, guys. So let me open up the little comment section here. How's everybody doing? What's going on, Micro Badger? Oh, hopefully you got some internet on the road. Ryan, hello, hello, hello. Shant, I was here first, but I didn't comment, right? Should we make it count this time? What's going on, guys? How are you doing? How are you doing? Treasuries up 5%. Yep. Right here, guys. Right here. We're going to go ahead and talk about it. We have a lot of things to discuss, right? So, a lot of things to discuss, ladies and gentlemen. Let me just see if I can do some editing here. There we go. Yeah, that's better. Yeah, okay. Yeah, I'm still having to bend down like this. I'm not really liking this. Let me raise this mic up. I don't like to bend down like that. It's like, hey, that's better. Oh yeah, that's good. Okay, good. All right, so let's talk about what's going on, guys. So there's a lot that we need to talk about. So in this video, we're gonna go ahead and talk about Peter Lynch, port that back to what we're doing in our mission. We're going to go ahead and talk about a potential Russell inclusion for Clover Health. We're going to talk about increased institutional ownership. For the folks that are in our lifetime access, we are right now upgrading the institutional ownership graphs. Give us some time. We're going to talk about a new upgrade that we have for the stock terminal. Then we're going to line this one up later, but we're going to go ahead then talk about the potential or inside OpenAI's Stargate mega factory. And we're going to use their due diligence to help us understand their DCF models and what they're predicting. And then we're going to talk to AI and we're going to go ahead and see what we can accomplish here. Okay. And then we'll do our market analysis. In fact, we'll do our market analysis right after P. Lynch, because that's really important. Hedge funds are the shortest they've ever been for a while. I'll explain to you my reasoning why I think they are. And then let's see. Yeah. So that's pretty much. There's a lot to talk about, right? I mean, right. All right. So let's go ahead and get to it. As you can see right now, we were down we were down $44,000, but now it's at 39,000. So I guess it gets back up to the YouTube title. As I put that in there, it dropped even more. Again, guys, if you haven't watched yesterday's video, I don't repeat things. The lives are long, but there's like about 80-90% of the material is new, right? So we talked about stop losses yesterday. They're buying at that's when institutions buy. Okay. So we're going to go ahead and talk about that. But first things first is I want to go ahead and mention something here. So what we're going to do is we're going to put on the headphones for a sec. These are bone conduction. I'll put on these headphones and we're going to check Bluetooth to see if we're connected. Okay, good. We're going to open this up here and we're going to bring this way. Okay. Peter Lynch, amazing guy. Okay. I don't know why this is here. We're going to push this here and we're going to push this here. And we're just going to go ahead and put Apple for now. Okay. So we can see this here and then sentiment. Yeah, it's fine. Yeah, it's fine. That's fine. And then we're going to go ahead and play this video, okay? Let me know if you guys hear this.
Lynch is highly regarded as one of Wall Street's legendary money managers. He ran Fidelity's Magellan Fund from 77 to 90. At the end of his 13-year helm, it was up over 2,700% and had become the world's largest mutual fund. He remains on the board of trustees at the Fidelity Group and is vice chairman of Fidelity Management and Research. His new CD-ROM is called The Stock Shop with Peter Lynch, and its strategies to invest in the stock market with confidence.
So we're going to talk about this, okay? What is the Stock Shop CD-ROM? What is this, okay? So let's go ahead and continue listening.
Lynch and its strategies to invest in the stock market with confidence.
All you need is a few, Charlie, all you need is a few good stocks.
Yeah, but this is your song. This has been your song for a long time. Only buy what you know.
No, but people are waking up in the morning and say, there's 5,000 companies out there. Which one should I buy? The average person ought to be able to follow 4 or 5 companies. They ought to be able to lecture on them. They understand the companies. And this forces you. This tool says to you, write down the story.
So essentially, it's a tool that helps them be able to lecture on a stock. What am I doing now? I'm lecturing on Clover Health and the overall market. How do I do this? Because I built my own stock shop. Sadly, this is no longer offered anymore, right? But first, let's see what it is, right? You need the data. You need the data. Okay, now let's go ahead and listen.
All right, but you keep saying this. The stock shop is what? What is it? This is a CD-ROM that you plug into your CD-ROM and play through your PC, and you come up with what?
Well, also it's a data stream. You can update information on 5,000 or 6,000 companies, right? Like that. You can get 10 years of financial data, 10 years of...
What does that sound like? 10 years of financial data? What is that? 10 years of financial... Oh, isn't this 10 years here? Oh, wait. Also, ours gives you since 1985. Ours gives you 40. Doesn't that sound the same thing as what the stock terminal is from How Stock Trades? Let's continue. Let's continue.
Years of income statements, 10 years like that. You can get 10 years of financial data, 10 years of income statements, 10 years of inventory. So you can get updates in all these companies.
But that's what you get on a Bloomberg terminal.
No, but it's only right now. And you know, it doesn't take 50.
That's what you get on a Bloomberg terminal. Oh my God, that's so expensive. Ladies and gentlemen, are you starting to see what I've built?
Data points. It doesn't go over 5 years. This on the companies you want to look at, it'll give you all the information.
Out of this.
It costs $6.95 a month in addition, and it's you get a free trial.
I see.
You get a free trial. We get a cut rate deal, and you can also buy it. You can get it from Fidelity for special programs. But this is something. This will help you update it. So you can say, "This is something I want to look at. I want to see what are the cash looks like." And if you don't understand what cash is, if you don't understand what debt is, I always said, let's say you're looking at companies that are doing poorly, that they're not doing very well. Why don't you buy the one that has $300 million in cash instead of the one that's almost bankrupt? I mean, a lot of companies are selling at $2 or $3 a share. They might be losing $10 million.
That's a no-brainer, isn't it?
But people don't do it. And
well, they don't do it because they don't know how to do the research.
You can look up the balance sheet. Say, listen, they got $300 million in cash. They're losing $10 million a quarter. They'll be okay. Yeah. This other company's got no cash, $700 million in debt. They're about to blow taps.
But you're telling every small investor in America anyway they ought to invest in a mutual fund, aren't you? I'm
telling you can do both. You could be investing in mutual funds, and occasionally you should be able to find a stock that's going to make a difference in your life.
If it's an industry.
Is that little quiver in his eye? You can find a stock that can make a difference in your life. Ladies and gentlemen, how many stocks have we found that have made differences in people's lives? Hims, Palantir, SoFi, Clover, so many other more, right? RGTI, up 2,000%. Okay? The point here is he says a lot of things. Okay, let's break this up. Okay, he says a lot of things. Okay, he goes in and he says, you know, a lot of people go in and they look at companies. They don't even understand how much cash they have. They don't even know how much cash they have. You know, why buy a company that has a lot of liabilities? Like, for example, people buy AMC, but there's a lot of more liabilities in their assets. And there's, right? Look at Mullen, right? Look at Mullen. We'll do another video because they just reported earnings, right? I think this will be a good, again, I don't make a video to advertise the company. No, of course not. I make a video to learn. This is because a lot of retail investors don't know the difference between a good company and a bad company. And, you know, people don't even know what a liability is, right? Liability is something you have to pay, right? There's total current liabilities and total overall liabilities. Total current is within 12 months. The other one is overall. Sometimes when people invest in companies, they have more future debt obligations than they have actual cash and assets. So how are they going to raise cash? How are they going to make cash if their overall business model can't generate enough cash to pay down their liabilities? They're going to have to go ahead and get more debt, but soon that'll end because that spigot turns off. And then later on, they're going to go ahead and have to dilute shareholders. So, and obviously you can see Mullen is the king of dilution, right? So the point is you need the data, right? You can't survive without the data. The data is integral, right? There's people out there that like go in and they want to, you know, they they think they can win the stock market by just selecting a company without even looking at how much information, like what does the company do? What is their financial health? And the issue is this information is backed away and locked, right? And unfortunately, the data is expensive, right? And even then, so you could see that what he's talking about, his stock shop, is basically what we created, but his looks at the time, it's no longer, it doesn't exist anymore, right? Sadly, right? I wonder why. I wonder why it doesn't exist. His only looks at 5,000 companies to 6,000. Guess how many companies mine looks at now? Over 70,000 companies. Our stock terminal now has access to over 70,000 stocks in over 44 countries. We are integrated in every stock market of the world. His did not have AI. I do research in AI, as you can see from my academic background. Ladies and gentlemen, this is all run by AI. So now you have access to over 70,000 stock markets, and then every other, there'll be new companies that come on, right? And you're able to go in any part of the world and see exactly what stock market and see their growth. That is insane. And calculate their intrinsic value and set a price target. Let's continue.
An industry you know something about.
Industry or a local company. I mean, there's a lot of people that saw La Quinta Motorins in Texas. They said, my God, there were a lot of people have seen local companies.
There you go. There's Mass of the Chin talking about Kozak. We got access to that too.
So
Friendlies, there's been companies come along locally. The people made St. Jude Medical, made a lot of money for people.
What was that motel you stayed in and then you went and bought a bunch of it?
Yeah, La Quinta Motorins.
Was that La Quinta? That's what it was, right? You stayed overnight there?
And I also got advice from somebody that was a competitor of this. There's a Holiday Inn guy saying, this guy, boy, they're killing us. They're tough, So that way, you get a lot of information. Don't throw it away.
All right, before you go. So what, you buy this thing and is it going to charity or not?
Well, all my profits. I mean, Houghton Mifflin is the person marketing this, and they're keeping some profits.
You haven't made them a charitable company.
And the company the company that's selling it, if you go to Borders or you go to Crop USA, they're not. Everything I've done, all my books and on this, my wife and I contribute everything to charity.
Is this because you made a bunch of money and so therefore what you do now you want to be?
That's part of it. But also, even if I hadn't made a bunch of money, I'd like to see people do a better job. These are people. I mean,
Your crusade is to influence the investing habits of America?
Have them do a better job. If they're not ready to do it properly, they shouldn't do it. And used to be able to retire and you get half of your last year's salary. Yeah. You have a pension. You can rely on that. Now you have to do it for yourself. Some people are presented. They're let go or they're early retirement. And they're given $500,000 and they say, "This is it. This is your retirement, lady. You're going to take care of it now." And some people have lost all that money in options in the last 3 months.
So what you're saying to people today about the future of the market over the near term is what? What's your feeling?
We can take
to buy business.
We can take a coin out and flip it. I have no idea what the next 1,000 points is going to do. The next 6,000 points is going to be up. The next 14,000 points is going to be up. The next 20,000 points is going to be up.
But you don't know what the next 1,000 is going to be. It could be down, could be up.
Nobody does. And it's futile to try and guess it. Corporate.
That's what people tell me. What do you think Clover Health stock is going to be next week? You think I know? Whoever tells you they know is bullshitting you. But I can tell you in the next 5 years, because the business is heading in the right direction. In the short term, it's a voting. Everyone votes as crap, right? In the long term, it's a weighing machine. Ladies and gentlemen, listen. I'm telling you right now, we are entering an era of AI, of the fourth industrial revolution. Okay. There are software engineers being fired right now, right? Because their job is obsolete, right? Software engineers now, the best thing they can do is, go to startups. A lot of companies are firing them. Ladies and gentlemen, I'm telling you, this culture of firing is going to start hitting your job. And yes, I'm speaking to the doctors that are listening. It's coming after you too. You can't see it, trust me, because it's growing logarithmically. But I do research in AI. I'm telling you, it's coming. You have to learn how to invest. Pick what side you want to be on. Do you want to be the side on the investor, or do you want to be on the side of the worker? You're going to be unemployed. You're going to be receiving universal basic income. You're going to have to find another job that's probably low paying. I'm telling you guys right now, I recommend that you learn how to invest. And this video is probably recorded in the 80s and 90s. And he's saying the same thing. He's saying the same damn thing. You understand what you understand? He's saying the exact same thing. And now it's even more evident. Choose what you want. Do you want to be rich or do you want to be poor? Don't give me that bullshit that says rich, I'm already rich and I still don't have money. Don't give me that nonsense bullshit. I get what you're saying. I'm talking about financial freedom, okay? Yes, you can have your family and health, and that's number one. But if you have to work 12 to 20 hours, like if you have to work a shit ton of hours, you're not free. You're trapped. You're trapped, okay? And what I'm trying to show you is I'm trying to show you a way on how I got out, right? And it's not just me. It's a lot of other millionaires and billionaires that have done the same thing and followed Benjamin Graham's ideology. So you can choose to stay idle. You could choose to do what I did, which is the long route, which took 14 years to be where I am now. Or you could choose to join us and start doing this within day one. I mean, I don't understand how clear this can be, right? Let's continue watching.
Their profits will be a lot higher 10 years from now. They'll be a lot higher 20 years from now. That's what you can rely on. Microsoft didn't exist 20 years ago. Staples didn't exist 20 years ago. Federal Express didn't exist 20 years ago. New companies will come along. That's what makes
Cisco didn't exist 20 years ago.
That's what makes Amgen has two $1 billion drugs. They didn't exist.
That's what he's saying. New companies come along every 5-10 years, and you now have the power to figure out what company is actually going to be successful. You have the group. You think, look at Netflix, Apple. It never existed in the 60s and 50s. These are new companies, and look where they are now. Clover could be that big one. Look at OpenAI. It didn't exist until 2016. Look at it now. It's over a $300 billion valuation.
Didn't exist 20 years ago. New companies that come along. That's what makes this country work. You got to keep your eyes open.
Okay, is the game over in Asia?
No, God, no. You can, some of these countries have a 56% savings rate. They have a high literacy rate. The game's not over. They're gonna have to.
But have they lost something?
Well, they're gonna have to. Some of their lending, they get carried away. They're gonna have to, step back, figure it out, and go ahead. It's certainly not over in Asia. No way.
So emerging markets is still a big deal.
Right, big deal.
What about all the criticism of derivatives and the impact they have had?
That's a little complicated for me. All I know is, I don't know about
it for you.
It's way over my head. I've never bought an option in my life. Time's on your side when you own a stock. I don't know about putting 3% down and buying a future and a strap and a straddle. That's way over my head. Can't do that.
Is that right?
Let somebody else do it. Yeah.
All right. So you're optimistic about the future of the American economy. Earnings potential for most well-run companies will do all right.
But people have to understand we've had 9 recessions since World War II. We'll have other recessions.
But we're not in one now.
But we may have one in the future, and don't get worried. It will happen. Sometime it'll happen, and no one will tell you when it's going to happen.
But won't the fundamentals tell you?
No, you'll find out after the fact. All of a sudden, you'll notice orders slowing, prices get more competitive, then earnings are down. Usually you find out after the fact. No one declares. Everybody's been saying we're going to have a recession for 5 years. It just hasn't happened.
It's great to see you.
Okay,
Hope you'll come back anytime, Peter.
Excellent.
Thank you
Thanks,
very much.
Sorry, guys, sending an email. All right. So as you can see, what did you learn from this, right? So it's very clear that financial literacy was important in the 70s and the 80s, and whenever this video was recorded, it's even more important now. In fact, I think it's even more important than ever, because I'm telling you right now, a lot of jobs are about to be displaced. And you might be asking me, well, Al, if a lot of jobs are displaced, then what's the point of learning this? Because you can invest in those companies, man. So you can make part of that money. That's what I'm telling you. But how do you know how to invest? How many people, they invested in Amazon, they won money, and they invested in other crap companies and they lost it because they know what finance is. I'm teaching college information at an elementary school grade level. You can't find that anywhere else. And I'm giving you data. So anyhow, sometimes, you can lead a horse to water, but you can't force the drink. You can't tell the horse to drink it, right? All right. So overall, hedge funds right now are the biggest short they've ever been, which I find actually interesting, right? They are about $25 billion short. And look at this, the past 10 years. They are short as hell, okay? Now, of course, this usually happens during good buying opportunities, but let me ask you something. Here's my speculation on what's happening in regards to That's the broader market. Yes, that's not Clover, right? Clover's not 25 million short, right? That's the broader market. In fact, Clover has no shorts right now. Okay. So you have to ask yourself, okay, so why? Why is the overall market short? I think personally, institutions, didn't buy the dip as aggressively as retail investors did. Retail bought a lot, okay, to a point where they bought more than they've ever done. And this is showing you and starting to show you the change in finance related activity within retail investors. A long time ago, you had to make a call to your broker, which costs about $35 to $50 a trade, right? And unfortunately, that cost a lot of money. And, only a few people had that, let alone be able to have, money to invest in. And, it's almost like travel agents, right? You always needed a financial advisor. Well, guess what? Now people are starting to take their financial, literacy and their financial, future into their own hands. So instead of talking to a financial advisor who historically underperforms the market, they're looking into the future and they're saying, well, what could the future be? And they're actually taking control. So what's happening right now is hedge funds are short the market at a high rate. And we've been telling you that I was expecting a leg down. But it hasn't happened. The market's been rallying because retail put in a lot of billions of dollars. So now you're starting to see it go down. And I'm going to explain to you in regards to the treasury, in regards to the treasury rates, the 30-year and whatnot, on why, on what can this be? Okay. So let's go ahead and do that. And let's start with that, right? So to segue into this, let's go ahead and talk about the treasury market volatility and government debt. I wrote it down. I'm just going to read it. Okay. Make it easier. Okay. So recent concerns over the U.S. government debt led to a weak 20-year treasury auction, which caused a temporary spike in bond yields and a dip in equity markets. Despite this move, the jump in yields is widely seen as short-term reaction rather than long-term trend. It almost begs the question regarding the bond vigilantes, if there's some more of a cahoot of a collaboration with the hedge funds of them basically doing this on purpose, trying to get back in, trying to let retail investors sell. Because it went literally from extreme fear to greed very quickly, right? And it did it so fast. Usually it takes some time. We still have increased bears. And the beautiful part is we're in a rally, and then now you're having this bears take over, which obviously some retail investors are going to fall sick to because they're going to be like, I don't want to invest in this. This thing's going to go down, which is fine. It shows me that we are not topping. We're not at a market top, right? This is very healthy, right? In fact, it's actually really good because it's a contrarian signal. Outlook for treasury yields and potential bond rally. So when bond prices go down, their yields go up, right? We talked about that in over 800 videos, right? And we have its own dedicated discussion within the Mastering Stock Market course, which basically hooks up to help you go from zero to hero, to help you be able to use our high-grade software, all lifetime access, right? Because you can't use this if you don't know what this means, right? It's like me giving you a fighter jet. You're going to crash, okay? So looking ahead, treasury yields are expected to peak soon. If the 10-year then drops below about 4.43, it's almost like a support level. If it drops, it could trigger a bond market rally. If bond prices go up, then yields go down. This is contrary to what mainstream fears surrounding fiscal policy and national debt levels. So that's what I think is actually happening. But if you speak to retail investors now, they're going to repeat the same thing. They're going to say bond prices going up for the highest time yet, but they're not seeing through the noise, and that's what I do. I see through the noise, right? I have my own GPS systems. You should see the setup. I have a big monitor here, a big monitor here, a big monitor here. I mean, literally, the setup is, I'm telling you guys, I have a state-of-the-art setup here. And these monitors are connected to institutions that I pay literally $20,000 to $40,000 to $50,000 a month. I pay a lot of money for this. There's a lot of information I pay for, right? To get access to this information. And obviously, it's helped me a lot, right? And it's also been helping be able to democratize this data in our research edge section. Yes, right? So there it is. So currency and market shifts in the weakening dollar. So the US dollar has been weakening, lifting alternative assets and currencies like Japanese yen, gold, and silver. The trend is anticipated to continue over the coming weeks, providing a tailwind for some international markets and dollar-sensitive sectors. So what is the implication of a weakening dollar on inflation and rates? So a declining dollar tends to benefit U.S. equities, especially exports and commodity-related companies, but it also raises inflation risks by increasing the cost of imported goods, right? Because what happens is if the dollar weakens, imported goods goes back to economics, right? Imported goods goes up. This dynamic could complicate the Federal Reserve's path to cutting rates, which potentially could delay monetary easing. That's fine. Let it happen. Who cares? Because if that's the case, then in the long term, we know that 2026 is going to be even more of a cutting cycle. This is great, okay? Because inflation is down. And if market expectation thinks inflation is going to go up, that's obviously not reflective of the data. 5, structural challenges in consumer finance sector. If you look at the buy now, pay later, to our wonderful partners, Klarna and Affirm, they're actually facing some pressure right now as rising consumer defaults and persistent high interest rates expose vulnerabilities in their business model. These companies, which flourished in zero interest environment, are now struggling to adapt. So they got to figure this out. Everyone's waiting, open door. Everyone's waiting for these interest rates to drop, right? And the people that are over leveraged are going to basically be seen naked, right? If you ask yourself, our stock trades, we've been in business for over 4 years, right? Or about around 4 years. I think we're going to be in business for about 4 years. You know how hard it is to be able to stay in business? Because I'm fiscally and financially responsible. I went from homelessness, which you have to be fiscally responsible in rationing how much food you got, basically to becoming a multimillionaire, right? So I know if I know how to run my life from zero to hero, I can obviously run my company really well. And the company is doing really well right now, guys, right? We have very strong cash positions. It's very strong, right? Very strong, right? And obviously, I'm its financial backer, right? Given that my performance in the market and my bigger portfolio, this lifetime access is here to stay for as long as my life is. And we're gonna work on it to be able to continue to be in existence even after my life, right? So there's that. So equity market outlook remains conservative. So despite recent equity market weakness, the overall outlook remains constructive. Widespread investor pessimisms and significant short selling by hedge funds may actually support further gains in the stock through a potential short covering rally. Shorts will end up having the cover soon. Okay. Remember, we have a Trump put, and soon we'll have a Fed put, and these hedge funds will have to end up buying because retail investors are going to continue buying the dip, I think. Okay. All right. Market research. So investor sentiment remains politically skewed. So the latest University of Michigan sentiment report shows inflation expectations are at a 3 to 4 standard deviations above historical norms. A sharp deviation from economic reality. A key factor here is political bias. A majority of respondents identify as Democrats, and their sentiment is heavily influenced by emotional charged media narratives rather than data-driven fundamentals. So if you go to University of Michigan, unfortunately, their political landscape has unfortunately clouded their judgment, which has led them to sadly lose money in the market. People that have Trump derangement syndrome are not investing in the market, and they're going to end up being poor, right? And potentially maybe a lot worse. So why is this? Media-driven fear is leading to poor investment decisions. Many investors are absorbing news that paints a dramatic worse picture than reality. As a result, we're seeing people pull out of the market or avoid investing altogether. Despite being in the early stages of what could be a generational bull market, this is a repeat of early 2000s behavior when many ignored companies like Amazon and Apple, missing out on massive gains. Wall Street sees it and exploits it. Wall Street often refers to retail investors as dumb money, not out of insult, but observation. When fear, not fundamentals, drives decision making, retail investors often sell low and buy high. Right now, that behavior is keeping them sidelined during one of the most pivotal periods of technological and economic transformation. Given I'm looking to the right as I look at the overall market funds that's hovering around $7 trillion. Ladies and gentlemen, it's very clear. We're entering the fourth industrial revolution. Major US companies are investing billions into AI, automation, robotics, and software. Capital expenditures are surging, which I looked at in the Q1 2025 earnings, like Google. Yet, despite these bullish signals, many are selling their holdings at a discount. A reflection of sentiment-driven investing, fear around political figures such as Donald Trump returning to office has irrationally convinced them that the economy will collapse because they have Trump derangement syndrome. Opportunity is in front of you. This disconnect presents a real opportunity. Many investors are offloading their 401ks and equity positions below intrinsic value. While not every stock is undervalued, many high qualifying names are. And in fact, those driven by fear are donating wealth to rational long-term investors. Be strategic, not reactive, ladies and gentlemen. Now, a big thing here that I want to talk about are credit spreads, and that would signal a recovery, not a recession. Credit spreads spiked above 500 basis points in April, but have since fallen below 400 basis points. A strong signal that investors' fear is easing. Think of it like this. Your friend has a risky startup. Once had to offer you 8% interest when safe bonds paid 3%. But now only needs to offer 6.5%. Institutional investors watch this closely, and decline suggests that the probability of a recession has dropped significantly. Let me explain. So let me go ahead and pull up this diagram. So as you can see, this is the U.S. high yield credit spread. This is April. It surged, meaning that if you have your friend's shitty startup company, he's going to offer you 8%, whatever, right? So then you take 8% subtracted from the risk-free rate. The risk-free rate, ladies and gentlemen, is what the government offers you. Obviously, we call it risk-free because the government can't default because they can print money. So it's an infinite cash loop system. The reason why it was high here is because there was a lot of uncertainty. And what that means is because there's a lot of uncertainty, you take, let's say, your friend's risky startup, 8% subtracted from the risk-free rate, which is obviously the credit spread, which is high. Now, because of it's lower, your risky startup friend said, well, hey, now that the stock market and the market doesn't believe there's a lot of risk, I can lower how much money I can give you. So the rate of the bond percent goes down, right? Because everyone's going into it trying to seek yield. So unfortunately, there's a lot of issues surrounding this, and a lot of investors don't understand this. And this is probably news to a lot of retail investors because it is what it is. They don't teach this. This is looked at very heavily in the world of Wall Street, right? We look at this because if people are willing to buy more of those shitty bonds rather than the treasury bonds, it shows that they are willing to take that risk. Now, why is that important? Well, very simple. Whenever interest rates go down, people want to seek yield. The discount rate goes down. And when the discount rate goes down, the intrinsic value goes up, okay? The problem is when rates go up, as you saw in 2022, the discount rate goes up, which means that, unfortunately, stocks like, for example, Meta dropped significantly. Why? Because people wanted to go to money market funds because it was safer for them to get a guaranteed 4 to 5% rather than risk. But obviously that proved wrong because look at where Meta is wrong now. Okay. Let me go ahead and do this here. Now, if you look at the portfolio, we are down 53,000%. 53,000, ladies and gentlemen. Hoorah! Right? So this is a great buying opportunity. There's, again, liquidity. Again, same thing, right? These are liquidity drops, right? These are liquidity drops. And this is an opportunity to create volume, right? Because with fear comes volume. A lot of retail investors now are going to say, well, hey, this thing's going to go back to 320 because that's, they're going to have these dialogues. And now retail investors are essentially buying back those shares, right? And this can go down further. Who knows? This can go down to $2, $2.50. I'm not saying it's going to go down there, but I'm telling you, this is the game of Wall Street. And the retail investors are going to say, well, I can preserve my money. They play these short game events because they don't know what the value of the stock is. All right. So let's go ahead and do this now. And just so people understand, the market right now, the S&P is down 1.61%. Dow is down 1.91%. NASDAQ is down 1.41%. And the Russell is down 2.6%. The VIX is up 12.69%, still 20.38. And gold, as we said in our research, is up. UnitedHealthcare is down 5.78%. It actually dropped by $18, as you can see here. Right? So there's a drop there. And again, not all truths are can be applied. For example, yes, this could be a liquidity drop, but who knows? Maybe this could be institutions selling the retail, right, on the leg up because they know that United's business model may be conflicted because of the medical cost. So the question is, how do you know which drop is which? You got to calculate the intrinsic value, right? You got to know the value of what the asset is. Okay. All right. So now that we talked about that, let's go ahead and talk about this here. So Russia-Ukraine tensions may ease, oil to follow. With talks between Russia and Ukraine showing signs of progress, we could see pressures ease on oil. If diplomacy continues, expect a potential pullback in commodities. This will obviously decrease inflation. Macro tailwinds in 2025, 2026. Looking ahead, Donald Trump is already positioning his cabinet for tax cuts and deregulation, two key drivers of market business. Meanwhile, the Fed is expected to deliver 2 to 3 rate cuts in 2025 and more likely in 2026. We're heading into a clear easing cycle, which historically supports equity rallies. Again, decrease in interest rates, decreased discount rate, intrinsic value goes up. Company-specific tailwinds. Valuation upgrades are beginning to reflect this macro setup. The Centers of Medicare and Medicaid, for example, have received 3.5 to 4-star upgrade for Clover Health with a 9% improvement in the effective rate, totaling an estimated 14% increase. Clover Health is also positioning itself for a well-established bull market rally with substantial upside potential. Likewise, you've already seen Tesla break out due to Elon's renewed focus and leadership. He's locked in. Walmart, meanwhile, is testing consumer strength. Its recent price hikes come at a time when Americans are stretched, and this will be a key litmus test for sustained post-COVID spending, if it's truly there. So there it is. So there's our the research. Let's go ahead and update these. Palantir's down 3.99%. UnitedHealthcare is down 5.78%. Humana is down 3.74%. Alignment's down 2.23%. Clover's down 4.61%. Ladies and gentlemen, what ends up happening is every time stock drops, more retail investors are going to sell, right? More retail investors are going to sell, ladies and gentlemen. And the more they sell, the better the better the outcome is going to be for all of us, right? We want a lot of these paper-handed retail investors to sell because institutions are going to end up buying. And the more of these institutions are going to end up buying, they're going to remove essentially the stocks from the float. Like, for example, every time I buy, I'm removing stocks and shares from the float. These stocks are mine, okay? I'm removing them. And the more of these are removed, the more of these retail investors are going to sell, right? And the more they basically get stopped out. And ultimately, there's going to be more buyers than sellers. And then as the company becomes profitable, then everyone's going to start chasing this. Okay. So yeah, so you have the market down and you have UnitedHealthcare down. So that's going to obviously drive Clover more. Absolutely. Let me go ahead and go to the comment sections real quick because I'm kind of behind on the comment sections here. I've been trying to get through this one here. Selling plasma after work. 22 Clover shells worth of plasma. Woo! Al, do you think Clover will announce any new? And you knew before. I mean, I don't know. I mean, I how could I possibly know, right? I don't know. Right? I have no idea. That guy looks like a flex capacitor. Who knew Doc Brown was a legendary investor, right? Making money when CLOV goes up, making money when CLOV goes down. Absolutely. Wife is a liability. Probably a good day to sell cash secured puts. 9-day covered calls for August pay 0.2. Exactly. Why are they covered calls on August paying 2 pennies? Interesting, right? Do we ever have covered calls in the $9? So we're going to talk about so what we can do if we really want to go ahead and do this. Sorry. If we want to go ahead and do this, let's look at the Kozak Samsung here. So to do that, you go to the Global Exchange Master List, and you just got to look at Korea, South Korea. It's .ks. So here's, if we can find it. Here's the Samsung stock. And that's kind of weird. It's like a 005930. So that's the Samsung stock. And we have to do Korea is well, it depends. It's Kozak, right? Is it Kozak or is it's KRX? Samsung is traded on KRX. So I think it's this one. Or maybe not. I guess we'll see. It's .ks. So we'll see if we have access to this. If not, we're going to get it. .ks. So let's see this here. There it is. We already have access to it. Excellent. So why is this important? Well, you can see now we've made some upgrades. Let me first, before I show you the numbers, let me show you the upgrades here. You see how powerful this is? Now we can take our American, amazing software that we built here in America and apply it to everywhere in the world. So we have a lot of international customers now. And I'm telling you, the data you have, you'll probably, if you purchase our data and our software, one-time payment for now, that's why it's going to be $25K in the future. And ultimately, all people that purchase now are going to be grandfathered in. But soon, once we get away from beta access, lifetime access will be removed, and everyone will be grandfathered in who purchased before that. But the interesting part is if you have this data, you have more powerful data than the hedge funds at your country, right? Because you're getting American software, right? We lead in software, right? I learned how to code in MIT when I did the open courseware, right? So this is very legit. Okay, it's very high quality, right? So what was I going to say? Yeah, so let's go ahead and show you this thing here. So if you go here, ladies and gentlemen, we made a couple upgrades now. This is Reliance. It's a good company. They just turned 2024 positive. But you can see now it gives you the exchange and it gives you the country, India, right? And it automatically converts the revenue, operating income, net income, book value, operating cash flow, expenditure, free cash flow per share, working capital to the Indian INR currency. And even let's say, for example, you look at Baba. Baba is traded in the United States in the New York Stock Exchange, but it's from China. It still gives you the Chinese revenue because the Chinese currency, because that's what it is, right? So isn't that impressive, right? That is the power of our stock terminal. Now let's go ahead and watch this. So this is the stock. It's 005930.ks. I mean, come on, Korea. You can think of a better name. At least call it Samsung, right? What are all these numbers? And the beautiful part is let's look at the extended history. You look at extended history and you can look at kind of what's going on here. In 2023, well, first off, look at free cash flow. It's been increasing, but all of a sudden something happened in 2023. Free cash flow turned negative, right? And it just turned positive. So in 2023, obviously it would have been a good time to buy because net income dropped as well, but you got to figure out why. And is it really Samsung going to go away? They most likely probably invested in capital expenditures, probably investing in AI. So a good way to look at that is look at cap spending. Look at cap spending, and yeah, you can see cap spending increasing, right? More than ever. So now let's look at 2023. It turned free cash flow negative. So let's go to Samsung and look at 2023. So 2023, it was, right around, 59,000. And then right now it grew to around 43,000. Sorry, 43%. the stock is down 36%. So the question now is, what's the intrinsic value? So let's see if we can figure this out. These are shares. So let's see if we can figure this out. Let's see. One moment. Internet's a little slow. Internet's a little slow. That's fine. So let's go ahead and see if this works here. So now all we have to do is just put the cash flow. So we go here, look at the cash flow. Let's just fetch the normal data. Look at the free cash flow. About 19,000. So we'll put this here. Oops. Wait. No, it's more than 19,000, man. I don't understand. These are the Korean units. I'm not used to working with these, but that's fine. And then the average share count is correct from that angle. And then you have to look at Samsung's growth rate. So they're growing 9.99% on average. Obviously, you gotta be a little bit better, but we could do 99.99%. You calculate the value and you see the bull case is 68,000, base case is 50,000, bear case is 39,000. You go ahead, take a look at Samsung's, where is it trading at? It's trading at 55,000. So it's currently trading at its base case. Its intrinsic value is 60,000. So that's what happens. You see how it's trading. It's trading next to its intrinsic value, then it falls down. I mean, you see how you can start trading these markets. Listen, guys. Let me master the chin. I need you to listen. Okay. I need you to listen. Are you listening? Master the chin. Listen. Okay. All right. So I've done this a long time, right? So let me see what I recognize the pattern right now. So if you go back to the 80s and 90s and the United States stock market, we weren't really advanced. Yeah, we were advanced, but we're really not that much. I mean, the GDP was not. I mean, we were big, but not that big, right? America was, we're good, but it's not like where we are now. Software wasn't available for retail investors. Only certain types of institutions had data. Okay. If I wanted to travel in the past right now, back to the 80s and 90s, is that possible? Do I have a time machine? I don't. That's not possible unless you have schizophrenia and maybe some psychological ailment. There's no way to go back to the 80s and 90s with the software. You can't. Imagine if you had the software. You would be a billionaire now. Okay. But what can we do? How can we go back in time? In terms of looking at the past. Okay. So let me explain this. This is very important. If you listen to this, you will become very rich. I don't know how to do this. Okay, hold on. First off, let me drugs. You can use drugs. Okay, you're listening. I'm busy buying. Okay, good. Best way to go back in time. Flux capacitor makes time travel possible. No. This, in all seriousness, let me show you. So hold on. Let me move this. I'm getting the iPad. getting the iPad here. So as you can see, Rockabye Baby, you're saying 82,000. We're saying 68. Obviously, we could adjust the growth rate higher. Let me see here. We could adjust the growth rate higher, or we can look at the growth rate expectations for Samsung to see kind of where things are at. Because again, it's all about your assumptions and what you think the growth. Obviously, I chose a lower one, but I'm sure there's higher. You got to look at the overall outlook of where they think it's going to grow. So I would say that's pretty good. Again, because rule number one, don't lose money. Rule number one, follow, or rule number two, follow rule number one, right? If you look at their historic free cash flow, they used to be. So what we can do is what I did is I just took 19,000. I just took 1 year's of free cash flow. They started doing really well in 2020, and all of a sudden they went downhill. So the question now is, are they starting to get back uphill? And it looks like they are. So based off of this, what was the free cash flow from this direction? So you could argue that the free cash flow is a lot higher. So you could go ahead and argue this. Let me open up the number here, and let's try to add maybe these three cash flows here. Let's just add the bigger numbers. Let's just call it what it is here. Let's add 2026. That's 2020. That's 22 plus 18 plus 36 plus 16 plus 25. That's about 1, 2, 3, 4, 5. Divide that now by 5. That's about 23.4. So we could just say 23. We can say 23,000. We calculate that. Then did I? Oh wait, it's not 23,000. It's here. Let me just do this. 23,000. We'll just say 23. Replace these with zeros. Replace these four numbers with zeros. 1, 2, 3, 4. Now we calculate it. And then now we get 82,000. You see? So Rockabye, you see how we're able to get the 82,000? All I did was I just took the average free cash flow. I chose just 19,000 to prove a point, to show you how to calculate it. But if you really want to calculate this and do it correctly, you would take the average free cash flow for all these years and then calculate the value. Now, based off of this, you can see how our lifetime access gives you the data, and all these other services. You never own the product. When you purchase, as of today, for lifetime access members, if you purchase this, you can see our product works, right? And it's one-time payment, lifetime access. There's no monthly subscription, right? This product works, and it's only going to get better. But you see now, so I was going to accurately calculate it now, but we just, all I did was I averaged 2016, 2017, 29. I just averaged these cash flows, okay? And I took about 5 years of cash flows, and I took the average, and I got around 23 million, whatever this is here, okay? Right? 23 million, is it? 23 million. This is obviously in Korean money, okay? This is Samsung, and we've taken the data from Samsung, right? So we just average these cash flows, okay? So by doing this, ladies and gentlemen, we got a bull case of $82,000, 82,300. So if we go back now to Samsung, we could see it went to 88,000 here, but you could see on the intraday it traded right at 87. So now let me go ahead and let me go ahead and show you what this is. Okay, so now let's go ahead and open up this. Let's go back to the original question regarding time travel. Okay, I'm going to show you that time travel is possible. Time travel is possible. I'm going to show you, not in the most way that you might think of. You're like, what? Time travel is possible? Okay, I got to hear this. How can I go back in time? Hold on. Okay, do you guys see this? I'm going to share with you now that time travel is possible. So we got the pen. So if you go back, let me go ahead and angle this down. Can you guys hear me? You guys can hear me, right? So if you go back to the stock market from 1980 to 2005, and you look at any stock, let's say this here was the IVC. This was the intrinsic value calculation. This is the intrinsic value. And let's call it around $80,000. Actually, forget Korea right now. Let's just call it intrinsic value. From the 1980s to 2005, did a lot of people have access to technology? Did the general public have access to technology? No. Did they have access to high-speed internet? No. Having technology was expensive back in the day. In the 80s and 90s, not a lot of people had access. The people that had access were those big freaking phones, and whoever had them looked special. Like, oh, this guy's that businessman. This guy's that businessman, right? So back in the day, technology was limited. So what ended up happening is people that understood IVC won. So stocks ended up going like this. They end up basically trading at their intrinsic value and falling back down. Then they go back to their intrinsic value and fall back down. Go back to intrinsic value, fall back down. Go back to intrinsic value, fall back down. Because it's trading pure in intrinsics. Because, like I told you, options is most likely not available. Korea, I think, banned short selling, right? Right. And also brokerage fees were very high. So only the elite had access to it. And you can see the elite that had the calculations beat the ones that did not. Okay. Now, we just went ahead. Hold on. We just went ahead and calculated the intrinsic value of Samsung. We got around $82,000. Obviously, we could be more accurate, and I'm sure we can get to 87, but we're just 8 plus 8 does not have to equal 16. If you buy a stock at $2 and it goes to 15, you made money. Okay. You see how you got 82,000? Now watch this. Look at this. And I'm sure the intrinsic value was trading between intrinsic value here. Does that look like what does this here? 88,000, 53,000, 84,000. Does this drawing look like this? Yes or no? Does this drawing look like this? Yes or no? Stocks go up to their intrinsic value and they fall back down. They go up to their intrinsic value and fall back down. What does this mean? People in Korea, exactly. Sure does. Hell yes. Exactly. The hedge funds in Korea are like the babies in the United States in the 1980s and 1990s and early 2000s. We can travel back into the future. Wait, hold on. We can travel back. No. Sorry. We can travel back to the past. No, now I'm going off the rails here. Back to the future, right? We could travel back, right? You're damn Al, you're scaring me, right? you can essentially travel back in time by going to a country that's still developing. How do I know this? Well, let's turn this into a medical discussion. You have a virus, right? A virus goes in your cell, latches on, creates all these other viruses, and explodes out a bunch of other viruses that look like it. Then it goes and you get infected. Your lymph nodes try to do a B cell and T cell response. They make, first IgM goes to IgG. You have an antibody response. You have CD8 cells. You have natural killer cells. They all come in. They try to fight the infection. Okay. The problem is if I get a patient at this level and the patient ends up dying, the patient dies. That's it. The infection has run its course. So how do I travel back to the past? How do I travel back to this? Very simple. I take this virus, put it in a rat. I put it in a rat. I infect the rat. The rat, again, I'm not calling Korea rats here, okay? I'm not calling them rats, okay? I can't, as a scientist, I can't say we put it in a human. That's messed up. That's messed up. I'm not doing that, right? And we're not putting a virus in a human because I need IRB for that, right? So we're gonna see rats for the scientific discussion, right? So okay, we put it in a rat. Okay, what ends up happening? Okay. So we go in a rat, and then this process happens again, but this time I'm here, and I get to analyze this process. I get to now see this process play out. Okay, that's what's happening right now. Korea is developing, so we can basically use this, and this software is very accurate. Obviously, the software is still accurate for the United States. It always will be, because the business is not equal to stock, but over time it will. Okay? So that's basically what I'm saying here, okay? So we can travel back to the past by looking at countries that are slowly starting to get their brains activated, right? And now that they're financially becoming activated, we already have software from the future, because South Korea want to become like the United States. Africa wants to become like the United States. India likes to become like the United States. The hedge funds are going to want to become like the United States. Well, I already have the United States software, and I already have access to the Indian, Israel, Africa, Korea stock market. And we have access to sophisticated intrinsic value calculation softwares. You see where this, you see where I'm saying right now? You see this opportunity, ladies and gentlemen? All right. That's what I wanted to basically take a quick diversion right now, because this is very powerful. If you know this, you're going to make a lot of money, right? Are you starting to see the potential of what this is? I'm trying to open your mind. People might say, well, Al, why don't you just keep this to yourself? Dude, in 100 years, I'm going to be dead. Dude, why be fucking greedy? Why be greedy like that? All right? I'm not a pig, okay? I'm not a monkey, right? I'm a cephalized human being. I'm an evolved scholar. Scholars share their information. They don't keep it to themselves, right? I'm not a bastard. I like to share my knowledge, because I actually am the only one who actually respects the oath I took in medical school. That warm and sympathy outweigh the surgeon's knife and chemist's drug. So anyway, going back right now, let's go ahead and so somebody on the chat is saying CLOV is up. Oh, nice little spike, but then went back down, right? But we got a nice spike. Who could that be? That could be institutions. Who knows? What is the volume? Right? But it seems like a very quick spike, and we got down. Again, don't get, again, the whole market's down, guys, right? Let's look at UnitedHealthcare. We got another dump. So institutions, we can be very clear. These are institutions moving this. So potential institutions are buying back Clover, right? All right. So now that we talked about this, we right? Listen, guys. Okay, you can see how much I care. Okay, you can see how much I care. I developed a software that's able to be used worldwide now. Okay, are you starting to see why this is going to be expensive? Right? This shit's not cheap. Okay, and what I'm trying to do is I'm trying to create the family I never had. Okay, if this software was affordable, I would obviously be able to drop prices, but it's not. This is hedge fund level information in your fingers. It's too expensive, right? And I'm telling you how powerful this is. This is a very powerful software, and I hope that now you're going to start to see the value of it. We just calculated the value of a freaking Korean company, right? You see this? Okay, so anywho, let's go ahead and update this. Yeah, UnitedHealthcare is down. Let's say Clover is up 1%. Yeah, this could be institutions buying. Trying to. So that's very good. This thing's down 3.98%. The question is, this thing's dumping hard. Interesting. This could be money flowing in. It's really weird. Money's flowing into Clover, but money's flowing out of United, and then now money's flowing out of Humana and United. That's actually really weird. Feed is freezing up. Is it freezing up for you guys as well? I just have a lot of tabs open probably. Palantir, stabilization, not really changed. Right now, hovering on break even. We're ready for another down leg. We should get some support. Russell 2000 announcement. I would say look out for, where's the 23rd? Friday, May 23rd, a preliminary index edition. So pretty much in 2 days, we should hear if Clover's logged in, right? So there's that. Clover Health's institutional ownership has increased, as you can see. So congratulations to all that are buying the dip. We have a new short clips channel. We have 48 videos now, 35 subscribers. What it does is it's now 36. If you would like to join, we've had a really good turnout here already. Within just 3 days, we have about 12,975 views. And I think we've now, let me see, actually, hold on. Let me see. This gives me a more accurate reading. So as you can see, within the past 48 hours, technically 24 hours, we have, see that? We have 17,600 views. So, a lot of the stuff is exploding. It's not reflective right now. It takes time to reflect, but our videos are gaining a lot of views. This is incredible. It's definitely very great. You should follow it. Obviously, the deep dives and the best, in my opinion, is going to be in the main channel here. But these are very quick ones. You want to just kind of quick ones. Watch them at 2 times the speed if you have that capability. Okay? So there's that. Follow us on here. Subscribe if you can. If you haven't subscribed to this main channel, you should do so as well, as it helps with the YouTube algorithm. Okay. Obviously, we've released our dominance in 44 countries and over 60 exchanges. We have billions of data points, 1 terminal, total market power. And these are all of the countries we have access to, ladies and gentlemen. We've already talked about right now Samsung, which was actually a tangent I wasn't thinking about talking about. I just wanted to prove a point. We've talked about our new release here. Obviously, for folks that want to join, please go ahead and use coupon code SAS, $1,200 off. And then now we're going to go ahead and talk about OpenAI's Stargate Mega Factory for Sam Altman. Oh yeah, don't forget this. Don't forget to subscribe here. Put the link in the description. I should start putting the link in the description on the main channel. You're right. I'm not the best at this, so that's a very good. I'm probably going to start doing that in the future videos. Absolutely. It should be mutual. Oh yes. So I'm going to go back to B-Rob. No. I could have sworn he said something. Yes, back to the, no. Yes, more volume. I'm going to answer that question right now. Now that I'm an Al Now I'm in, Al. Honestly, you're wild. The amount of work and time you've put into the terminal is insane. Hold on for a sec. Hold on. This is sad. This is sad. A bird flew in the patio door, hit it. I want to go take it to the vet. I'm so sad it hit it, and it's bleeding right now. It hit it so hard that it's bleeding out of its neck. I think it's going to be dead. I don't know what to do. What should I do? Should I do some vascular surgery now? Should I start sewing it? I don't know what to do. It's in the patio right now. That sucks. Let me go ahead and close the patio door. Let's take a quick break. That's sad. I'm going to go back to this question here. Let's take a quick 5-10 minute break, as we've been on here for an hour and 13 minutes. We're going to do this video. We're going to do something really cool. We're going to talk to AI. I'm going to show you something that you haven't thought of, and that's going to blow your mind. Okay. So let's go ahead and let's just take a quick break, and that's it. Let's take a quick break, and we will go from here.
Albert Allen's got the secrets in his hand. Retail heroes taking over this land. Trading stocks with a master plan. Fortunes rising on the Clover brand. Numbers rolling, deals never stop. Bulls are charging, markets gonna pop. Albert's wisdom higher than the top. With Clover Health, we'll hit the jackpot. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's health, dollars gone sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Stocks are climbing, reaching for the skies. Albert's insights cutting through the lies. Retail dreams standing tall, they rise. In this world of trades, we're the prize. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's health, dollars gonna sway. In this game, no more bills to pay. Albert Allen's got the secrets in his hand. Retail heroes taking over this land. Trading stocks with a master plan. Fortunes rising on the Clover brand. Numbers rolling, deals never stop. Bulls are charging, markets gonna pop. Albert's wisdom higher than the top. With Clover Health, we'll hit the jackpot. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's health, dollars gonna sway. we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Stocks are climbing, reaching for the skies. Albert's insights cutting through the lies. Retail dreams standing tall, they rise. In this world of trades, we're the prize. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's health, dollars gonna sway. In this game, no more bills to pay. Albert Allen's got the secrets in his hand. Retail heroes taking over this land. Trading stocks with a master plan. Fortunes rising on the Clover brand. Numbers rolling, deals never stop. Bulls are charging, markets gonna pop. Albert's wisdom higher than the top. With Clover Health, we'll hit the jackpot. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Stocks are climbing, reaching for the skies. Albert's insights cutting through the lies. Retail dreams standing tall, they rise. In this world of trades, we're the prize. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's health, dollars gonna sway. In this game, no more bills to pay. Albert Allen's got the secrets in his hand. Retail heroes taking over this land. Trading stocks with a master plan. Fortunes rising on the Clover brand. Numbers rolling, deals never stop. Bulls are charging, markets gonna pop. Albert's wisdom higher than the top. With Clover Health, we'll hit the jackpot. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's
16% down at the same time. That's fallen about 18%. The stock market is now down 21%.
We're now down 43%. It was the worst day on Wall Street.
Are you sick and tired of the noise that mainstream media uses to manipulate the stock price, telling you to buy at market peaks but sell at market bottoms? At All Stock Trades, we solve this issue by providing a team of excellent developers at your service with hedge fund data centers directly on Wall Street. We provide institutionally graded data that gives you a market edge like no other. We distribute and democratize financial data to investors around the world. Imagine having access to the same information billionaires have through our centralized platform. Our mission is simple. We want to empower retail investors to get a fair shake on Wall Street. Welcome to All Stock Trades.
And that's exactly our mission, to empower retail investors to get a fair shake on Wall Street. So GP, you finally joined Lifetime Access. Like, honestly, you're wild, man. The amount of work and time you put into it, the terminal is insane. For God's sakes, man, take a break, right? This gentleman just dropped over $3,000, and he's telling me to take a break, right? Usually when people drop that much money, they would say, you better work hard, man. Like I said, for every dollar that you invest, I will try to 100x that. You understand what that means? The amount of information we have here is unlike no other. Unlike no other. Unlike no other. You have no idea. Okay? So, at the end of the day, our platform is here to serve you, GP. I think I said JP. And we're here. Okay? So yeah, the bird situation is not good, unfortunately. You saw me stop. I was like, what the hell was that? I was like, oh, boom! I was like, it was like a rock hit the damn thing. Even my dog was like sleeping. Like, what was that? I'm like, I gotta close that thing. All right. So anyway, stop back-to-back videos. Love it. Appreciate you. Yes, B-Rob. The inclusion of the Russell would bring about more volume and more of the ability to get to intrinsic value. It should bring mutual funds inflows. Put the link, absolutely. And don't forget to subscribe here. You'll have the advantage when investing in up-and-coming countries, absolutely. And that's the power. Get after it. Done. Hi, Al. Everyone give some love to Clover YouTube. Well, here's the thing. We're not just a Clover YouTube channel, right? We do other stuff. It just so happens that this thing's so undervalued. It's below the IPO, the SPAC price, but it's also at the same level in, when they raised capital, when they were a private company. Is this your break? Yeah, it's my break, right? Oh no, wait, let's see here. Yeah, it's bad. Hey Al, with tools, GPT and other platforms now capable of real-time stock analysis, but how do you see your software staying relevant? So the problem is, if you go ahead and talk to ChatGPT and tell it to calculate intrinsic value, it can't, because it's not given the real-time data and the historic data, because usually that data is locked away. So it gives you just some garbage price, right? Because if that's the case, then Bloomberg will be going out of business, and Bloomberg and Wall Street is not going out of business. So our platform, has that, right? So there's the data stream. So that's one aspect of our platform, right? The second aspect of the platform is you have an educational component. The problem is you are as good as your knowledge is, and having knowledge is like growing another limb, right? You're growing another skill, another thing that you can do, another limb. So I'll give you an example. If you ask a fish to climb a tree, it can't. It really can't. It physically can't. It's going to be dumb for the rest of its life. The same thing happens when it comes to knowledge. If I go to a prison system, and I go to a prisoner who's been institutionalized for over 20 years, okay? And all he knows is the thug life. He's a thug man, And I'm like, sir, here's ChatGPT. Go ahead and, be wealthy in Wall Street. how does he know what questions to ask? Right. So that's why the first most important component is the educational platform, the Mastering Stock Market course, which teaches you to go from zero to hero, because you're only as good as your knowledge, right? So we give you the education, okay? Then we give you the data. The problem is, like Peter Lynch's stock terminal, you can throw the data at people, which is sadly it's no longer existent, right? But the issue is, how do you know if they're understanding it correctly? This is where we have the third component, which is the community. We have a community of like-minded investors that have a total net worth of over $45 million, right? And soon it will be over $1 billion. Now, that's important, guys, because if you have a community of like-minded investors, okay, you are able to, one, have the education to know what to do with our, because we have our own AI models, right? Top of the line. What to do with our data, which is top of the line, okay? And the other part is this a good company to invest in, and be surrounded by other millionaires? The problem is, with all this ChatGPT, it doesn't have access to the full complete data picture. It doesn't integrate it all together. It doesn't have an educational platform that'll take you from zero to hero. I don't know why they're balloons, right? But okay, we'll take it. I don't know if you guys saw that. Did you guys see the balloons, or am I tripping? And the fourth thing is, it doesn't have a community. So that's my answer, right? Right. So I would say so there's that. And if again, if you don't find value in the platform, and if you think that there are other alternatives that are fractions of the cost, go find those platforms and use them. Ultimately, I think that we are the best platform. We have no direct competitors. Each platform does one thing. You would have to get about 10 to 15 subscriptions, and you still don't have access to a community. There's one place that gives you access to a community, and it's called, I think, SumZero, and it costs $7,500 a year to get access to that. So I encourage others to go to other platforms, and because at the end of the day, we want people that are locked in and they're fully committed. And if they think that a $4,000 investment will now, with the SaaS coupon code, with $1,200 off, a $2,800 investment is expensive, then they don't see the value, and those are not the right people for our platform, right? Yeah, man, that really gave me the bird. Yeah, man, I feel so bad for that bird, right? Can you do surgery on the live? No, that's so terrible. So sad. I don't know. I don't even have tools. So sad, dude. That is so sad. I want to do something. Snap it like a Slim Jim. Come on, guys. UNH wouldn't help the bird. Yeah, it's terrible. If I really had access to the Clover Assistant, maybe I can ask it what to do. Like, did you check its A1C? Let's see. Just going through the comments here. Going through the comments. Oh, I'm sure they do. Damn, you guys went at it with the chat. So you want to look up TPEG for PVA. So are you part of our lifetime access? If so, you can message me directly, right? I don't see if you're Rudel. I don't. What's your Discord username? So what you do is you look at this company. Is it TPEG? TPEG. And you look at this. So where's this stock from? It's VIE. It's German. So you go in and then you go to German. And it depends kind of where you have a lot of German stock markets. I don't know why, but you have a lot. So you have to look at all these area codes. So you got to see what stock exchange is it from. So um so you got to look at that and you got to see where it is. So it's in Vienna. And it looks like a fairly new company too. So one moment. Let me see if I can find it. So let's see here. I know. Yeah, I guess I took a break, but not for the right reasons. So you have to look at it to see kind of what exchanges it in, and then the thing is, well, let me think here. And then the other one that you have is PV, or is that the company itself? Okay. And he said TPEG. One moment. So what we can do is, I see that this is from Vienna. It's a Vienna stock exchange. So what we can do is we'll be able to. So what I'll do is I will contract out to Vienna. It's a small stock exchange. It's very tiny. So we'll contract out with them, and we'll be able to include that in there. I would. The fact that we're not, it's not in it. It must be a minor stock exchange. So I'll probably take a look at it. See, it's in Vienna. Vienna's a beautiful place, though, isn't it? I've always wanted to go. Let me see. But you have to use all these zip codes, though. There's like, as you can see, there's so many Germany zip codes. You need to go through all these zip codes to see if it'll be able to go through them, right? Oh, Vienna is in Austria. Shit. Really? What? Am I? See, guys, listen, guys. I'm an American, so I don't know. I don't know crap about crap. We don't know nothing about geography. Are you? What? Am I? I must be tripping. I don't know. I thought, am I looking at the? So where is this from? Is this, what company is this at? Is Austria? You have to use the Austria. Oh yeah, here. Use shan't. Thank you, Shant. Thank you, Shant. I don't know what I would do without you, Shant. I love you, Shant. So as you can see here, here's Austria, and here's Vienna. Vienna Stock Exchange. Honestly, now I have to look at how this place looks like. I thought it was. Let me see the where. Dude, that still looks like Europe to me, man. But you know, that looks really nice. Holy crap! Wait, Austria is in Europe. It's not Australia. Got it. Oh, Lord have mercy. Oh my God. Okay, so we got it. So all you got to do is we have access to it in the Vienna Stock Exchange, VIE, which is .vi. So the problem is most likely the stock that you picked, it started trading publicly in March, so it's still new, and we don't have its financials because most likely it probably hasn't submitted any, or if they are, they're still new. So it's a new stock in the exchange. So they need to send the regulatory stocks, right? That's so we have access to it. I was about to call them right now. I was like, Michelle, or like, Linda, why do we have Vienna in Germany? And then they're going to call Germany. They're going to be like, Germany, we need Vienna. They're going to look at us like, God, freaking Americans, man. Stupid ass Americans, right? Stupid ass Americans. We're so stupid, I swear, dude. Americans don't know nothing. We're so stupid, I swear. We don't know nothing. We really, the only thing we know is the red, white, and blue, right? That's all we need to know, though, right? All right, I'm still alive. Australia, no, Austria. I've been in Vienna, great city. Arnold is from there. Oh, that makes sense. Shan't is a contraction for shall not. Dude, I appreciate you, man. That was very helpful. All right, so now that we went ahead and we went through these shenanigans, they need to report their financials. Yes, we have access to it. That's great. I was about to make myself look like a dumbass by yelling at some people to get access, but we already have access. They're like, "Sir, you already have access." I'm like, no, I'm not. We need the Vienna and Germany. They're gonna be like, "Sir," like they're gonna think that I live in World War II era, where I'm sure probably Germany probably invaded Austria back in the day. Like, so it's not 1940s, right? I'm like, what? Okay. All right. So okay. So we went ahead and do this. When for al die Dutch Raiden bio UNS means USA, right? I don't know what the hell that means. All right, let me see. Hopefully it wasn't curse word or anything. Okay, so now let's get to what we were here for. Let's go share the screen. Okay, so we're gonna go ahead and do a couple of things. Okay, let's listen. Sorry.
$1 billion at least in AI infrastructure. American company that will invest $500 billion at least in AI infrastructure.
USA.
The data centers are actually under construction. The first of them are under construction in Texas, the Abilene location, which is our first location.
Abilene is a town on the.
So anywho,
So Willie isn't tech. I think this will be the most.
To Abilene, Texas.
this is Abilene, Texas.
It does.
This.
Hey, Emily.
Thank you so much for.
So this is the architecture of this whole thing that's being built right now is the physical product of the AI infrastructure. what you have, ladies and gentlemen, what you have is big deal, right? A lot of people will say, I don't believe in AI. I can't see it. That means it's not real. Sir, please, listen. Yes, it is real. There are data centers out there. It's going to create a lot of jobs. Yes, water is a problem. They're creating a closed loop system. So anyway, I recommend watching it. I'm going to talk about a few things, okay? I see your comment here, right? And then, yes, automatic selling taxes goes into treasury stock. Where do the third gift goes? That comes out of it. Absolutely. You got it. So there's not really a dilution. You're starting to catch on, billionaire shimp. You're starting to catch on. All right. So now that we did this, we talked about the $5 billion investments. Let's go ahead and let's listen to this.
Masa, it's so nice to see you. What conversations did you have with Sam that led to Stargate?
Well, we have a shared vision of
all
vision mankind to be
Invest
explain
100 billion.
So they're talking about the $500. This is the CEO of SoftBank, about $500 billion of investment. Now let's go ahead and look at. This is where I wanted to show you. Here it is, right here, guys.
That covers the capacity we think we need for the next few years.
And promise that.
All right, here it is. Are you ready for this? So she asks him, why $500 billion? Do you think you can make that up?
We will invest $100 billion. And you told me, oh, Masa, go for 200. Yeah. Now I came back with 500.
Explain the math to us. How does it all add up to needing $500 billion?
Well, that covers the capacity we think we need for the next few years, given our growth projections. The interesting question is if we knew how to get $1 trillion right now, which we don't, would we be able to deploy that profitably in the next few years? And I'm not sure about that, but I feel confident we can make 500 billion of value back.
Okay. So why is this important? Okay. The reason why this is important is because they created their own evaluation models and they think that they're going to be able to make 500 billion. They didn't say 1 trillion. They said 500 billion. Ladies and gentlemen, you have these multi-billionaires and trillionaires coming in with these lots of money, right? Lots of money, guys. Okay. Billions of dollars. They've done the due diligence. They've done the math. Okay. And that's what the expected investment is. And that's what they think they're going to be able to return. So that's share and show you the overall market of artificial intelligence. Okay. So this is the future. And I know a lot of people are like, I don't think AI is the future. It's just a little chat bot. That's all it is. It's just a little chat bot, right? It ain't gonna do my electricity work. I'm safe. I've been plumbing since the past 15 years. No AI is gonna take my job. Right? That's what they're gonna say, right? The problem is what you're gonna say, this is my interpretation of I've been to Kentucky, right? I've been to shout out to Kentucky, right? I've been to Tennessee, right? So the thing is, their data center is being built. Okay, there are data centers being built. All right, and essentially, what's happening is because of these data centers being built, this is a physical product. This is real. This is computing power. And instead of cars coming out of this big building, intelligence will be coming out. So instead of cars and something you can hold, something you can feel, intelligence will be emanating out. Where is this intelligence going to go? Yes, it can go to your chatbots. Yes, it can go to your chatbots, right? You have the Eastern Kentucky accent down, don't I? Oh, there it is. We're going to go ahead and throw some hands, right? We're going to go throw some hands. Shout out to my Kentucky friends, right? I got some nice friends from Kentucky I made. I went to a wine area, very nice wine in Lexington, right? Got that Eastern Kentucky accent, right? Yeah. USA, right? So the thing is, intelligence will be coming out of these places. So where is the intelligence going to go? Yeah, it's going to go to your TVs and chatbots and but it's going to go into a physical form soon, which was a robot, Tesla Optimus. So to all my electricians out there, to all my surgeons, to all my's, it's coming for us, whether you like it or not. This thing will be more sophisticated than us. We have more connections in our brain than this machine, but yet this machine's faster at retrieving information. So it's optimized to perform better than us and more efficient. Imagine if it has the same connectivity power. We will be, in the next 10 years, heading towards AGI. Okay. So, so there's that. Now, what does this mean for us? So first off, let me go to comments. No career change. Still gonna be a physician. Still gonna be a doctor. Let's see here. You have Eastern Kentucky accent down. Oh, yep. Okay, we got that. To an extent, don't short sell humans and experience. Exactly. Yeah, bourbon and bluegrass, baby. Let's go. Right. Let's go. Right. I went to the Kentucky Derby too. It was really fun. Got my girl nice hat, large hats. All right. So now that we went ahead and talked about this, now let's open up Chat GPT. Okay. Let's go ahead and open up this chat bot. Okay. So let's go ahead and talk to this chat bot, and then we're going to go ahead and see if you guys can hear me. Can you guys hear this chat bot? Let's go ahead and let me know if you hear it once it goes ahead and starts speaking. All right. We're going to go ahead and visit. All right. So good. Let's go ahead and talk. Hello. How are you today?
Hey there. I'm doing great. Thanks for asking. How about you?
I'm doing pretty fine. Do you mind if you can talk in an Eastern Kentucky accent for me?
Sure thing. I can do that. What's on your mind today?
I appreciate it. Can you even make it sound more Kentuckian?
You got it. I'll lean right into that Eastern Kentucky sound. How's that working for you?
Sir, I don't want you to lean into that Eastern Kentucky side. I want you to jump into it. I need you to lean so much that you're leaning hardcore that we're going to be calculating intrinsic value calculations of horses. You understand what I'm saying?
All right, I hear you. I'll go full on Eastern Kentucky mode. We're talking so down home that even the horses will be nodding along. How's that hit you?
That hits me real fine. You best to listen to me, or we're going to toss some hands and we're going to go red.
Well, I sure appreciate that. No need to toss any hands. We're all friends here. Let's keep it easy and just chat about whatever you like.
Excellent. So we were talking about Sam Altman, the CEO of OpenAI, and he was saying something along the lines of asking $500 billion for Stargate, and he thinks that he's able to return $500 billion back to investors in the coming years. So go ahead and explain to me a little bit about that.
Sure thing. So, from what's been going around, Sam Altman's been talking about this massive initiative called Stargate, which is essentially a super ambitious plan to build advanced AI infrastructure. They're looking to raise something like $500 billion to push the boundaries of AI capabilities. And the idea is that this investment could yield huge returns over the coming years by making OpenAI's technology even more powerful and capable. It's a bold move, but given how fast AI is evolving, he seems to think it's a bet that could pay off big time.
Excellent work, but the problem is you dropped your Kentucky accent. What happened to that? From now on, I need you to speak in a pure Kentucky accent in this whole interview.
Oh, my bad. I slipped out of it for a moment there. I'll keep it pure Kentucky from here on out. Thanks for the reminder. Let's keep this interview rolling Kentucky style.
No. I wanted Eastern Kentucky. The whole damn interview, please.
Got it. Eastern Kentucky all the way through. I'll stick to it and keep it consistent. Let's dive right back into it. No slipping this time.
All right. So what happens if I were to tell you that there was a company out there that could somehow be able to diagnose people earlier with diabetes, have early medication adherence, be able to decrease the medical cost ratio by 1,500 basis points, and as part of a Medicare Advantage plan that utilizes artificial intelligence, right? And among that, have early detection of chronic kidney disease as well as chronic heart failure. Given the Medicare Advantage market, and given that this company is doing this based off of this artificial intelligent bull run that we have for the past few years, and given Sam Altman's projections and the overall Medicare Advantage market, what could be the possible market cap of a company like that?
Well, reckon a company like that doing all that early detection and leveraging AI to drive down costs and improve outcomes in the Medicare Advantage market could be sitting on a gold mine. Considering the scale of Medicare and the potential savings, not to mention the value of improving patient outcomes, it could easily climb into the tens of billions, if not more. Given the growth in AI and healthcare tech and the kind of returns someone like Altman's projecting, it wouldn't be far-fetched to see such a company with a hefty market cap potentially hitting the 100 billion mark if they play their cards right and deliver on those promises.
Heckin', are you saying this is the gold mine? Did you just say $100 billion? And you better be still talking on that deep Eastern Kentucky accent. You hear me?
I hear you loud and clear. Yep, I said it could be a gold mine, and $100 billion ain't out of the question if everything lines up right. With all that AI-driven innovation and the Medicare Advantage space growing, it could be a real game changer. And Kentucky accent strong as ever.
Excellent, excellent. So we're talking $100 billion valuation. Now, do you mind if you go ahead and search the web? Do you mind if you help me search the web? And can you find me any companies that are doing that right now? Give me the top 3 companies that sound like they're doing this right now, please.
Several companies are using AI to improve early diabetes detection and enhance Medicare Advantage plans. For instance, Zebra Medical Vision uses AI to analyze medical images and detect early signs of conditions like diabetic retinopathy. Lark Health offers AI-powered programs for diabetes prevention and management. In the Medicare Advantage space, companies like Go Health are leveraging AI to enhance the enrollment process and offer better plan recommendations. These companies are at the forefront of integrating AI into healthcare to drive better outcomes and reduce costs.
Interesting. So there's no other companies that are doing this, something with medication adherence, utilizing artificial intelligence, something along the lines with early detection of diabetes, right? Diabetes and A1C and all these other things. There's no other Medicare Advantage business that's using some type of artificial intelligence, you hear?
There are indeed several companies using AI for medication adherence and early diabetes detection in the Medicare Advantage space. Alongside Zebra Medical Vision and Lark Health, companies like Livongo, now part of Teladoc Health, use AI-driven platforms to help patients manage chronic conditions like diabetes, ensuring better medication adherence and improved outcomes. Companies like Omada Health also offer AI-powered solutions focused on chronic disease management and early intervention. These companies are leveraging AI to enhance patient outcomes and reduce costs, making significant strides in the healthcare market.
Excellent, excellent. So unfortunately, you're missing out on a company that's actually doing this right now. Are there any publicly traded companies that are doing this?
There are indeed publicly traded companies actively using AI for diabetes management and Medicare Advantage. For example, Medtronic is planning to spin off its diabetes division into a standalone publicly traded company to boost growth and innovation. Dexcom, which develops continuous glucose monitoring systems, integrates AI to enhance diabetes care. Clover Health, another notable name, offers Medicare Advantage plans and uses machine learning to provide better care recommendations. These companies are at the forefront of integrating AI into healthcare to improve patient outcomes and operational efficiency.
You lost your Kentucky accent. Stop being a stupid ad.
Oh, shoot, I slipped up again. My apologies. I'll keep it in that Eastern Kentucky tone from here on out. Thanks for keeping me on track. Those companies I mentioned, like Medtronic, Dexcom, and Clover Health, are all publicly traded and are pushing the envelope with AI and healthcare.
Now, interestingly, you mentioned Clover Health, and you better be talking to me in that Kentucky accent. You mentioned Clover Health, but the thing is, it took you a while to mention it. Why did it take you a while to do it? Because it's the one clearly fitting the bill, don't you think? Now that we're on the same page, go ahead and analyze this and talk about the potential of its modeling capabilities regarding the Clover Assistant. And what could market cap be if it's able to decrease the medical cost ratio by 1,500%? Or I'm sorry, 1,500 basis points, which is equivalent to 15%. Go ahead and do that and give me an analysis to first principles through an Eastern Kentucky accent.
All right, let's break it down. Clover Health's Clover Assistant uses AI to help doctors make better decisions, aiming to reduce costs and improve patient outcomes.
Stop. I said Eastern Kentucky accent. Give me that answer in an Eastern Kentucky accent. Jesus.
All right, let's break it down in that Eastern Kentucky style. Clover Health's Clover Assistant is all about using AI to help doctors make better calls, aiming to lower costs and boost patient health. If they can really slash that medical cost ratio by 1,500 basis points or 15%, that's a huge deal. It could push their market cap way up, potentially into the tens of billions, depending on how well they execute and scale. Investors love companies that can deliver solid cost savings and better care, so the sky's the limit if they nail it.
All right. So let me go ahead and now bring this to me here and let's exit this. Okay. So, ladies and gentlemen, and let me go ahead and see this. So let me see here. One moment. So I hope that answers the question for most people. AI is not ready, right? So we had an earlier guest comment regarding the future and where it is, and you can see how fast our terminal gives you the data versus this, right? Now let me explain to you something. That was very painful, and I think the AI slipped up because yesterday I did something. So let me show you. This was a chat. This was a chat from yesterday. I said, because of Stargate, of them basically spending $500 billion, yada, 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 what's the total market cap value of the whole market of AI? It calculated and it said potentially 15.7 trillion. Okay, that's a lot of money. Okay. So then I asked it another question. So if you have a company that uses artificial intelligence to decrease medical costs by 1,500 basis points, that can be used by and get integrated into any insurance payer, doctor's office, or whatever is able to decrease costs to help patients be healthier, detect diabetes 3 years earlier, stabilization, chronic kidney disease, yada, yada, yada. What would it be? And it said a potential cost, say savings. It could, first off, it said, there's about 34.6 million beneficiaries, which what Clover said in their Q1 2025 Q&A questions. They said Medicare Advantage plans are projected to receive payments of $500 to $600 billion in 2025. They said that if this is able to reduce the medical cost ratio down, and the overall savings could, save them 200 to 360 billion annually. And the revenue capture of this company could basically be, $7.5 billion of annual revenue. Okay. And with a revenue multiple of 10, you could have a business that does this considered to be $75 billion, which is a $150 stock price. But now watch this. Did I say anything about Clover Health? Did I say anything about Clover Health? I didn't. Look what it did. Real world examples. This company, Clover Health. I think because I was using the audio version, it was being stupid. It actually did say Clover Health, right? I was hoping it might say it through a Kentucky accent. So what we'll do is we'll redo this chat to see if it'll still be able to show me this. So we'll go ahead, open up a new AI chat, and then we'll go in, share the screen of this new AI chat. We'll go ahead and we will copy this in there. I think it was because, you see, B-Rob, you were saying that, oh, it's terrible. No, I told my wife to cancel our beach vacation so I can buy the terminal bundle. Show her the price. She's like, it doesn't come with the book and signature. I guess I'll ask for it for Christmas. Well, hey, you know what? When you come meet us in our lifetime, I'll go ahead and we'll do you'll shake my hand and we'll do signature as well. Absolutely. But yeah, so it gives you the market size, it gives you the calculations, and then it tells you big tech is involved. So now let's go ahead and ask it the second question here. And let's see if it pulls up Clover. First off, let's see if it pulls up Clover. There it is, Clover Health. You see it? You see how I was able to pick up Clover Health? So yes, B-Rob. It does pick up Clover Health. What this proves to me is when I speak to that AI model, it's speaking in a lower educational level, not as good as just a chatbot. It can't think, so it has to respond faster, so it's not able to think. It was giving me every answer except that. So you could see how this, so now you could see now it talked about Clover, and the question is, watch this. I'm going to search Clover Health into this. Did I tell it to mention Clover? Did I tell it to mention Clover? I didn't. You can see in the chat. I didn't. See? Let's see. Ask AI. I'm just going to copy your whole thing here, and I'm just going to put it here. Okay, I'll buy more. So you guys like that Eastern Kentucky accent? That's pretty good. But the damn AI kept on forgetting the accent. Right? I thought we were gonna have some fun. Right? Now I'm gonna have to toss some hands. All right. You guys weren't expecting this, right? Just kind of messing around here, I throw you curveballs, I'm just having fun, So this is a table. There it is. Thanks, Al. I'll bring the book to Vegas for you to sign. Absolutely. We'll have more books published by then too. It'll be fun. Okay, excellent. No, we'll have a great time in Vegas and the golf course. Guys, listen. This is the beauty about this, okay? The first thing I do in the morning when I wake up, I check the stock terminal page to see all of our members commenting. We've created a community. I look forward to checking my phone, So anyway, it's really fun. And I see other people that are on the terminal. You guys feel the same way, right? The feeling is mutual, right? It's really fun. We go from being serious to dildos fly. It's like literally the red and green dildos everywhere, right? It wasn't sure which Eastern Kentucky dialect to use. There are a bunch. Oh yeah. I bet I only know maybe one or two. I don't know. But they're really funny people. Okay, so Okay, so now let's just talk about the market cap here. So what I would like you to do is let's go ahead and talk about the market cap of Clover Health and the potential if it was able to do this. I would like you to give me the bull case, base case, and bear case based off of this projection that we're talking about regarding artificial intelligence. So listen, guys, because you have to know what questions to ask it. I told it and I gave it a place to start. You think a person who doesn't know the stock market is able to understand this? No. That's why we need a community, right? Because you can only get out of AI what you put in. Garbage in equals garbage out, right? So based off of this, let's look at the bull case and base case here. 10 to 15. So that's about $30 stock price, right? Good. So now let's go ahead and say, but let's go ahead and take a more holistic perspective. If this company does perhaps decrease medical cost while Humana, UnitedHealthcare, all other companies are increasing the medical cost. Let's say they become the dominating player and they are applied nationwide where they're able to decrease the cost savings of healthcare spend about 1,500 basis points every 2 years. So about 700 basis points the first year and 800 basis points the second year. What is the overall future potential of the market cap of Clover? And I want you to give me what the Medicare Advantage market and the overall market's going to look like in 10 years from now. Because I assume it's going to approach in the upper 800 billion to potentially over $1 trillion in spending. So go ahead and give me this projection. So as it's thinking, what I'm going to do is I'm going to share this and I'm going to share this and I'm going to go back to this and I'm going to read this to you. In 10 years, I strongly believe that it is possible for Clover to have made the biggest positive impact in healthcare while simultaneously accruing the largest market value in healthcare in excess of any healthcare company that exists today. So let's go ahead and read this. 2023 Medicare Advantage market valued at $456 billion. 2032, $758 billion. 2033 projected increase to 1.7. Kind of a big increase. But it's citing this work, okay? So with Clover's model, the bull case is $50 to $100 billion. 10 to 25, bear 2 to 5. So imagine if it does do that. Guys, we're talking a lot. 10% of 1 trillion, that's 1 billion. That's a lot. And it makes 25% of that times 10. That's a lot of money. Okay? So I hope that you're starting to see this whole picture. The problem is you can't just do this and say, okay, great, let's go ahead. You got to follow the data. You need the data. You need to calculate the intrinsic value. You need this information. It all comes together. Okay? Right? You can't fly a plane if you don't go to pilot school, right? It's very simple. You can't fly a plane if you just do pilot school. You need experience. You need flight hours. Okay? It all comes down to an onion-leveled approach where multiple paths come together to formulate something truly remarkable. Right? You invest in this guy here. Let's see what this APLD has to say. So based off of this APLD, we got, let's unshare the screen here. Let's share this. Let's go here. Let's go here. And let's go here. So you can see right now, free cash flow, operating just turned positive in 2023. So operating cash flow turned positive. Free cash flow is still negative because they're spending their CapEx. They're spending a lot, probably building data centers. So I don't know. Let's do that's kind of weird. It has old data, so I don't know. So it looks like 2023 turned positive, and now so 2021 negative. So I mean, let's see. That's probably what it is. And then it stopped and it came back online now. Okay, so that's fine. So 2021, it was $28, right? The problem is in 2021, something happened. The free cash flow turned negative and the operating turned negative. So because they turned negative, look what happened to the stock. The stock dropped to $1, right? So the stock dropped to $1 here. So you could see it went negative, right? 2021, it turned negative. So the stock dropped to $1, which you can see here. Okay, it went from 28 to this. So then, so let's look at 2021. So here's 2021. So then we start seeing it increase. So quarterly, you can look at the quarter analysis, and I'm sure you can see it turned again positive in Q1. So 2023 was a time to get in. So 2023, you start seeing it become better. It's still at $1, and now it's four bagger, right? So are you starting to see the power of the stock terminal? And that's just one data point, right? Then you put in intrinsic value, you look at the MO, you look at the earnings call, you use the generative AI, you talk to your friends at the stock terminal. That's it, guys. That's it. It's that simple. Let's see. That's so sad. And I pray too. I agree. We don't want those types of folks that are just more money first, right? All right, guys. So that's pretty much it. We talked about the hedge funds panicking, the Russell, the portfolio basically dipping, UnitedHealthcare and Humana falling, but not as badly as United. United actually is dropping more now, so that's interesting. It's 293. So I think hedge funds are unloading. We'll get into finding out on the SEC 13F filings because people are probably selling. But for individuals, if you guys want to way out of poverty, if you want to essentially get out of the matrix, which is what I've done, I'm living beautifully. I have, I'm a multimillionaire. I'm living like a king. And if you want to break out of that, and if you want to, and I show you how to do it, and I just don't show you how to do it. I bring you other people that I've showed how to do it, and they've done it. And not just that, I give you the data to allow you to do it, right? I think it's very undervalued in the fact that we have for our, in some areas, our PayPal and Affirm to be able to get a loan. And 6 months, 0% interest. That's very powerful. And you can extend it to 36 months if you want. It's very powerful. So at the end of the day, some people are going to look at this. They're not going to see the vision. And that's fine. Just like B. Rat Cooley said, we're going to pat them on the back, wish them well onto their 9-to-5 journey. The question you have to ask yourself is, what do you want out of life? Do you want to be the player or do you want to be the non-player character? The people that join our lifetime access become player characters because they have the money to do with it whatever the hell they want. They have the money to call their boss and say, watch your mouth, right? So God bless you all. And I'll see you on the next one.